Join us as we deep dive into Pakistan's financial markets, bringing you commentary, opinions, and analysis from the leading voices and experts in this domain. Together, we will learn how to capitalize on the opportunities and navigate the risks that are present. Our end goal? To become knowledgeable and confident investors. So let's go.
Welcome to another episode of Deep Dive Pakistan. We are fortunate to have frontier market specialists Zin Bekkali and Hifza Zia from Silk Invest join us today. Zin is Chief Investment Officer at Silk Invest and co-founded the firm in 2008 and brings 16 years of diversified financial experience to the company. Zin has held executive positions at ING, Bain & Company, and Fortis Investments. He holds both a bachelor's degree in econometrics and a master's degree in science and operations research and management from the University of Amsterdam. He is also a CFA charter holder and completed his executive MBA at London Business School. Hifza is the lead portfolio manager for the Frontier Markets strategy. She joined Silk Invest in 2015 as senior investment analyst covering frontier Asian equity markets and later on progressed to portfolio manager designation. She has more than a decade experience of both buy and sell side equities and has previously worked at Al Baraka Bank Limited, Laxon Investments Limited, and Elixir Securities. Hifza holds an MBA in finance from the Institute of Business Administration from Karachi and is also a junior associate at the Institute of Bankers, Pakistan. On today's show, we hear Silk Invest's investment thesis on Systems Ltd, a publicly traded IT services firm. We hold a discussion of the company's financials, its moat, as well as risks to be mindful of. And finally, we bring the conversation together by comparing the firm's current market price versus Silk Invest's assessment of the company's intrinsic value. Lots of great insights from experts to help with your due diligence. Let's get started. Zin and Hifza, pleasure to have you on our show today. Listen, I am very much looking forward to today's discussion and in the process, hoping that we can provide our audience a sneak peek on how professionally managed funds like yours conduct due diligence on a potential investment opportunity. And so with that said, I'm hoping if you could get us started with an introduction on Silk Invest, your investment philosophy, and then as well, very interested to hear why the focus on the Pakistani equity market.
Good. Let me start with that. I think basically as Silk Invest, we have set up the firm in 2008, very much as a company. We said, okay, we are focusing on frontier market. Now, frontier markets basically are really the countries which are not covered by the main indices. And within that context, at that point of time, Pakistan was one of the countries. And so basically the key blocks there are really frontier Asia, Africa, and the Middle East. And to a certain degree, the frontier market definition, you can define it in different manners, but let's say they are or the country was just completely not covered by emerging markets indices or the smaller emerging markets countries. So certain countries, even today, Pakistan has been promoted in the meantime to EM states, but they're still very tiny country within that within the index. And that's really, from our feeling, is that doesn't necessarily reflect how the global world opportunity is developing. If you think about it, around a third of world population is actually living in those type of frontier markets or smaller emerging markets. And we as a firm, we are very much believe in the fact that this that is really the opportunities more than anything defined by the number of people that are in such a country. If you look at the consumer hubs in the world that we are looking into, they are eventually a good representation of the future growth, because these countries are converging to our levels in terms of GDP and in terms of economic activities and so forth. So it's very important to look at countries, whether they are Pakistan and Bangladesh, for example, in Asia, or countries like Nigeria and Kenya in Africa. But that's high level, really our core thinking is that you have to follow the consumer opportunity. And this consumer opportunity, if you say that as a first starting point, then you go out the second is how do you benefit from this consumer opportunity? And there where we align ourselves to say, okay, to benefit from this consumer opportunity, you need to find countries and companies who are most aligned with that opportunity. And that's where we feel is that local entrepreneurs, local business models who are building and providing a product to the local consumer, or are benefiting from a local ecosystem, from a local context that allows them to compete globally. So basically you have two stories there. You have one is like a company who's very successful in let's say servicing a local consumer, for example, a local bank or local telecom company, which is very much focusing on servicing that local consumer, which is with localized products. That is one. And the second element, you have certain companies who are able to compete globally by benefiting from local competitive advantages. And we most in our most what we do, we focus on category one, because that's, let's say, the most in most of frontier markets, that is really the biggest category of companies, food and beverages companies, telecom companies. But there are also a certain category of companies who are able to use the local infrastructure and local people or local advantages to build a globally competitive company. And that is really the company we're going to talk about that later, is really a company within that second category.
That's fantastic. Thank you very much for that. I will say I did a bit of research on Silk Invest. One of the things I found is that you are fundamentally focused, more value-based investors. And I know we're going to get a taste of that in our conversation today. You'd already mentioned this, Zin, and so you are correct. Our conversation today will center around Systems Inc., or Systems Limited, rather, I apologize, which is an IT services firm that trades on the Pakistan Stock Exchange. Now, what makes this pick even more interesting is going back to our first two episodes, both Matthias from Tundra Funds and Massimo from Callisto Partners identified Systems Limited as a core Pakistani holding in their fund. And so with that said, I'm hoping if you'd be able to start us off with an introduction about Systems Limited, and then as well the IT services industry in Pakistan.
I will give the floor to Hifza in 1 second, but I think just to take a step back, we as a firm identify ourselves as more GARP. So we say growth at a reasonable price. I mean, it's a very old-fashioned type of investment approach, but we truly believe it makes a lot of sense in our countries. So we are not necessarily a pure value. We like reasonable price. And in some cases, it means almost you have growth at value prices. That's what we have in many of the frontier markets today. If you look at the frontier market opportunity, you almost can define it today at growth at value prices, because the average of our portfolio is a PE of 7, for example, while many of our companies are reporting very rich, resilient double-digit earnings growth. That's very, very important. Now, systems, maybe the best way to do is to give the floor to Hifza, since she's with us. Maybe Hifza, you can take the floor and introduce the company.
Thank you so much, Sid. So talking about systems, I think it's one of the fastest growing company in Pakistan. It has been into operations for last 4 decades. It started its operation in 1977, and it's a full service technology consulting and business process outsourcing company. And the interesting thing about the company is that its business model evolves around the digital transformation, IT and BPO, as well as the contact center services in Pakistan and international operations. The Another unique factor for the company is that it's pure employee owned company. Like employees have their majority stake in the company, and they have been there in the company for I think the founder has been since inception, and then some of the management has been there for more than 2 decades. Uh, at present, the industries the company is focusing is the retail, telecom, FMCG, financial sectors, and some of the projects coming from the government and public sector departments. Talking about its profitability, just giving a brief overview that for last 5 years, the growth has been very tremendous. The top line has been growing at a CAGR of around 32%, while the bottom line has shown around 40% growth, which is, I think, very different from the companies which are operating in Pakistani environment. The presence of the company is across 3 continents. In Asia, it's Pakistan, it's the hometown, and then in Middle East, and then another major presence is in North America. Just a little bit overview about the growing sector. And with the recent digitalizations post-COVID, the importance and have been increased in terms of investment in the software and other IT service IT sector related services. And if you look at the recent numbers, the IT sector is now contributing around 1% to the overall GDP of Pakistan. And the overall the number of companies which are operating in the industry are close to around 2,000, including all small and large companies. But I think the prominent ones are the Evention, Netsol, and Systems, because obviously they are also listed on the stock exchange. But we do not see other companies coming and going public so far. As in terms of trade balance, one of the interesting thing is that the IT and IT related e-commerce services are in surplus, as exports are growing rapidly and has the number has touched $1.2 billion by the end of FY20, and which is mainly the software exports. The government is now keenly focusing on increasing its share in the overall trade balance, and the target is of around $5 billion by 2023. Recently, there has been very good startups in the IT sector space in Pakistan. If you see like the Kareem, Daraz.pk, Zameen.com, Rosie.pk. So we have been seeing good and very unique startups coming in the IT sector in Pakistan.
Yeah, I think, and I think it's very important just to highlight that the offshoring industry, if you want to call it like that, is an industry which is still has a lot of room to grow. And I think if you think about the way it has developed, obviously, initially you had countries like India, and to some degree in Asia, some other countries like even Philippines doing very, very well. And I think Pakistan has been a bit later to the party, but if you look at the last few years, you see really an acceleration in that regard. And partly it's because, again, to really look at this, why did that happen? And partly is because of the youth in the country, the good level of English, a lot of people traveling, a lot of diaspora sometimes coming back. So there's really, and of course, the number of people who are studying and coming out of university. So that really builds on that, the good infrastructure in terms of the relatively good infrastructure, so the telecom infrastructure. So those are all things that are helping the company to develop. If you look specifically at system, and if you look really as the founder who has done that, I mean, it's really very, very often stories of companies also relate to the person, right? And this case, like the founder who started the company in 1977 and was started to work in the US in the 90s. So it's really important to make also that link is like it's the person that has given this company a development is somebody who comes from that type of background. Similarly, there are another leadership guys like was work for Boston Consulting Group. But it's really interesting to have that is that those are people who can see the two sides. They can see the opportunity of operating within a country like Pakistan, but at the same time they understand very well let's say what is required internationally. And then of course finally you always have to catch this nice type of cycle, and the last 5 years have been just brilliant. I mean, to grow revenues by 4 times and operating profits by 7 times is really fascinating. And I think that to some degree the good news is maybe only starting, because with this COVID crisis, as we are seeing, there's an even bigger acceleration of moving to, let's say, use of more IT services. So I think those are type of elements that, you have leadership team, you have like a macro type of sector that is positively driving, being as a catalyst, and then you have the local advantages of Pakistan as a country.
Thank you so much for setting that stage. And you're absolutely right. Some of these numbers on revenue and profits that you've shared, growth over the last 5 years, I mean, that's akin to a company in the startup space. You wouldn't have thought a company that was founded back in 1977 would be throwing these type of CAGR numbers that Hifza had alluded to. So just fascinating when I hear some of these numbers. We spoke about revenue, we spoke about earnings, and thank you for that. And I'll just ask you as sort of the next step, what other financial data or business metrics would you recommend investors look at when assessing a firm within the IT services space? And with that said, how has Systems Limited performed across these measures that you'll be speaking about?
Yeah, I think as a firm, we are naturally quite conservative, because we take the reasonable price approach quite serious. So we don't want to overpay for growth or for any dollar of earnings in that regard. So I think it's very important to set the tone for that, is that we are naturally conservative in what we do. So we look at things like revenue growth, we look at PE, we look at price to book, we look at dividend yield, and so forth. But this company, we were to some degree a bit lucky during the crisis, during the Q1, when everything went into deep correction territory. That is the area where we started. We said, let's build a position in this company, and that was a good, because at that point of time, the company was very cheap. But even today, if you think about it, they are still trading at a PE level, which is, let's say, around 17, 18, and that is cheaper than a lot of things that you find in the global sphere, because this company, to some degree, is not a Pakistani company. It's a Pakistani company by domicile, but it's not a Pakistani company by valuation. You have to compare it to other companies in this sector within the global IT sector. And I don't have to tell you what sort of the valuation that we see today in the Nasdaq and some of the other companies in that regard. They are really at very extreme valuation, where some companies are trading at over a PE of 100, even well-established firms like Amazon or Netflix. So in that sense, we feel this company has a good valuation. They are not cheap versus local multiples, but they are cheap versus global multiples. And their growth potential is far more well established. It's not, we don't feel that we are taking a big bet on the company nor the sector. The offshoring and the IT services industry will continue to favor companies like this, who have a good track record in servicing global companies and have a very local cost base. I mean, Hafsa, I'm not sure whether you have the cost per employee at hand, but it is far cheaper than what we have outside of Pakistan.
That's excellent. Thank you for that. And it makes a lot of sense. You spoke about some of these ratios other than revenue and earnings. You spoke about price to book, price to earnings. And I just summarized those because I know a lot of our viewers will be taking notes down to better understand, as they conduct their own due diligence, what type of numbers should they be looking for. And most of the numbers Zin mentioned right now, or ratios that he mentioned, easily available from the financial statements that are published right on Systems website. And right now, I think the two that we mentioned, probably you could get them right from the income statement and the balance sheet. So some easy to obtain numbers based on that. So thank you for that. As we're talking about, and we're on this subject of ratios and information, one of the things that I think most value or fundamental investors look at, and I would think this would align with your GARP methodology as well, Zin, is the ability to earn future cash flows. And those future cash flows are important because they provide the investor or inform the investor some understanding of what the intrinsic value of the firm is today. And so, keeping that in mind, I guess I'll ask you, what do you believe is the competitive advantage of Systems Limited that will allow it to maintain, at the very least, or even grow its cash flows in the future, given, and I think we've already alluded to, local competition that exists, as well as global competitors who'll be vying for the same business as Systems Limited? And then as you speak about that, I'm hoping if you could provide a few comments on the management team's track record, because I think that would be very useful to this conversation as well.
Okay. I think if we just before that, just like as you highlighted, is that for us, we work based on target price. And for the target prices we use multiples as a reference, and we use a DCF. So maybe Hafsa, you want to walk through the DCF, what we have done and our assumptions, and then we can also talk a bit more broadly about their competitive advantage afterwards.
Sure. So our intrinsic value for the company is basically coming from our DCF valuation, and we have valued it based on the next 5 year to 6 years free cash flow to firm. And then our WACC is around 15.6% for the company. The company has very little debt on its book, but we still incorporate that because we want to be more realistic about the companies. So eventually we can say that the WACC is equal to the cost of equity. It's just 97% equity and around 3% is debt. So the WACC is around 16% for the company, and our target value is still coming around 350 rupees per share for the company. And I think given the levels, given the growth the company will be foreseeing in terms of its expansion, in terms of its different products, which are very unique as compared to other IT firms in Pakistan, in a way that if we just compare with NetSol, which is just focused on the finance and leasing companies, and if we compare it with this company has products which are complete IT services. So it caters to the retail for in terms of the supply chain management, in terms of retail, the retail audience assessment. For the telecom companies, they are providing softwares and services related to their overall improvement in their mobile products and such products for other companies like FMCG as well. So this company has a very different business model as compared to the IT firms we are seeing, the big ones, which we compare with like Evincion and Epsol. And I think that is the niche factor which will keep the business growing in terms of its top line growth and obviously free cash flows as well. And the company doesn't have major debt needs. So it has just major component is the working capital. So it can easily get because it has no debt on its book. So that is the best point for this company. And I think that's the company, that's the reason that we like it as compared to other IT companies in the IT space in Pakistan.
Yeah. I think to come back to the initial points of example, price to book has very little value when you're analyzing such a company, right? So, but what you look at is really its ability to grow revenues and its margins. And those margins are very significant. So basically, if you look at the way they have their current margins, or EBITDA margin is 20%. And we believe that that is a very sustainable margin because they have a very competitive cost advantage, well, that can really help them to continue to grow over time. In fact, the gross margin, if you look over the last 5 years, it's really amazing to look how stable that has been. You know, it has been, the gross margin has always been around 30%. And that is really, really interesting to see that. And then if you look at you see where is growth coming, from which regions, you realize that they are still only now to a certain degree, they're really scratching the surface, you want to call it like that. I mean, their revenues from North America, for example, are only now starting to go up, and that is very interesting to highlight. But equally so, I mean, they're also very competitive in the home market in Pakistan. They are able to compete. So if they are able to compete in Pakistan with at, let's say, cost levels of Pakistan, then they should also be able to compete outside. And as I highlighted by Hifza, the fact that they have a very specific products niches where they are able to that adds to it, and that is quite interesting to see.
Thank you for that. You covered quite a bit in there, both the competitive advantage as well as your calculation of what the intrinsic value is. So thank you for that. We will touch on that in a later question, and I'll perhaps ask you a few more questions related to that. I'll just perhaps find out from you, any thoughts on the management team that leads the company? Do you have any sort of thoughts, perhaps even personal conversations, or how you compare them to other industry peers?
Hafsa?
Sure. So for the management, if I just shed a little light on our investment philosophy, after screening for a particular country, we also do, like, we are big on ESG assessment and gender gap assessment. So we have to analyze a company if it's not coming on our ESG parameters. We have basically 6 principles which we follow for our ESG assessment, and then for gender assessment, we already have another 6 principles which we have to take into account before investing in a particular company. So before even going to the management, we have to check if the quality of management, country and institution wise, the business model, international standards of the company, they are compliant with the in a very proper way. And then for the gender assessment, we have to see how much they have women focused, the top management, the board of directors, and then the workforce as well. And then what are different marketing practices and the different programs they are using to improve their overall gender, the gender parameters within the country. Once we are comfortable with that position, and if we get some positive pointers on that, then we move towards the having a connection with the management. For the Systems Limited, our connection has been very limited till the analyst briefings, because we have been trying to get in touch with the management for having a personal face-to-face interaction, but because of COVID, we have not been able to have personal meetings with them so far. So our interaction is very limited to the analyst briefing, and the company is, I think, is really good in terms of having very responsive to the analysts and investors' queries. And we have been very happy that their openness and their the interaction with the external parties have been very good so far. So I think it's the management, it's the management's dynamic working style, and their interaction with their internal and external parties has been really good for us. And that's the major reason that we like Systems over other companies.
Yeah. So I think that's very important to again highlight, is that they are coming from a very good background. Many of them have worked in very well-established firms. They have this multicultural aspects. They adhere to a certain value system, and they communicate well. I mean, they are score very well in terms of governance and communication, like investment relations communication. And those are all points which add up to their strengths. It's very important that if you are an investor, that you are able to maintain those type of relationships.
Thank you again for that. Some good information. And as I'm collecting this, we're piecing together quite a promising picture of Systems Limited. On the other hand, this is an uncertain climate given the pandemic. And then with that said, I'll remind ourselves in this conversation of something one of the greatest value investors of our time, Charlie Munger, says in all investments, and that's invert, always invert. And so I'll ask you, what do you believe is the biggest risk that investors should be cognizant of before making an investment in Systems Limited?
Yeah, I think that you see that what we have learned in frontier markets and many emerging markets is that it's really interesting to see that the risks that you have are, I will almost call them more macro than typically the company. So basically, if you want to break it down, typically in terms of the companies, you have country specific. Let's say you start with global risks, you have country risk, then you have sector risk, and then you have company risks. Now, company risks are risks that you can manage well by having local people who are analyzing companies, establishing contacts, and understand in depth what the companies do or not do. Now, that is something which we feel very strong about this company. This is a company which is well managed, has a good business model, and has, let's say, a sustainable competitive advantage. So that is one. But if you go a level higher, then you look at the sector. How is this sector behaving? Will the sector be, let's say, what will happen with it in the future? I think we are in a period where the sector is receiving a lot of positive news, and that is a good thing. But what will happen when, for example, we move to a post-COVID situation? Will this sector then have less growth or anything like that? Now, we don't believe so. We believe actually this sector will continue to grow. The servicing, IT servicing industry, especially the global one coming from emerging markets, we believe is quite sustainable. And then the third one, you have the country one. And the country one, I mean, we have to call it as it is. There are risks, obviously, and I think we have seen it in the past. There are things that can derail global, or let's say the local markets, whether it's the currency or inflation or politics or anything like that. We feel quite positive and quite optimistic about the current situation, that Pakistan is doing relatively well. It has managed very well the COVID crisis. Its current accounts is in a good order. The fiscally is conservative. So there's a lot of things to be positive about. We know there's a lot of political risks and macro risks, which everybody can know. I mean, unfortunately, countries like Pakistan, people hear more about the risks than about the positive stories. So we don't even need to talk too much about it. But it was very interesting for us, let's say, as a factor to look at, is really what happened to the import and export in Pakistan and its current accounts balance. And that is something which is very interesting to highlight, how positive the positive development in that regard. And that is a big, for us, gives us a lot of comfort in terms of the country's stability. And then, of course, you have the global environment. The global environment, okay, that is like a big unknown to a certain degree, especially what's going to happen next week with the US elections. But that has traditionally also become a big play. Will international investors invest more in emerging markets? How to say, will we have a risk on or risk off a type of environment? We, as a firm, again, we believe that luckily is that a lot of international investors are very underweight emerging markets. So if people analyze those type of risks, then the risks are almost to the upside. We believe that there's a lot of underweight positions in EM and frontier markets. So basically, in a more normalized environment, we believe a lot of international investors can come in. So basically, that's high level how we think about those, call it those 4 levels of risks. And in this company specifically, if you look at those 4 risks, you see that it is quite a positive assessment. I'm not sure, Hafsa, you want to add anything to this?
No, I totally agree with you about the macro risk we have, and obviously, given the company has major exposure towards North American and GCC, around 74 of the revenue is coming. So we believe that a little bit of currency risk would be there, but I think the business model wise will mitigate in terms of good volumes and good contracts coming in future.
Thank you very much, both of you, in laying that out for us, a good understanding of the risks. But as I listen to your story, I can clearly make out both of you are quite bullish on this company. Now, I say that, and I'll say, I feel the market also recognizes the value of this company. Right, Zin had alluded to this initially. If I go back to the market bottom in Q1 of 2020, the stock price of this company has, I think, gone up 3-fold. And so, keeping that in mind, the current price levels, I know, Hifza, you mentioned an intrinsic value of the company, but for a long-term investor who's looking to be in Pakistan for a period of time, do you still believe, and are you continue Do you continue to be bullish on the long-term investment prospects of this company? And the intrinsic value that you spoke about, could you perhaps share with us a few comments on the valuation methodology you'd used? You'd mentioned DCF. Was there anything else that you add to that analysis? Because I know viewers would find that as a real treat as you speak about some of those things.
Sure. So for mainly our DCF is the valuation technology for coming up for the intrinsic value for the company. But we also look at the relative valuations, as Zin also mentioned. We do the peer analysis in terms of where the companies stand in terms of different ratios. For example, price to book, price to earning, return on equity, and margins, and then debt to equity level. So we also analyze that aspect of the company and see where the company stands. It for sure is expensive on some of the multiples like price to earning, price to book, but we have to see like the future growth prospects of the company as well, which are already incorporating the growth factors. And if we consider like the major revenue is coming from the North American operations, and if we just compare it with the some of the peers in the North America region, you will see that the company is way cheaper than the companies which are operating in North America. So this gives us kind of very uh, the comfort factor that company has still room to grow. And the way they are the good factor for the company which happened lately is that some of the international clients which wanted the company to have face-to-face meetings before going into some kind of contracts, now they are all relying on online meetings, which has given a company a very the edge as compared to having the meetings earlier before COVID happened. So that is a major plus point for the company's revenue generation. So you sitting at home, you can get good contracts because the management has a proven track record. They have good connections in international market with US exposure, and I think another big opportunity we are foreseeing that also comes from the Europe side as well. So I believe this interesting value, although it's just the 1 year, we use the 12 months target price, but I think the company will grow beyond the 12 months time period as well. And if you look into the recent 9 months number, which they have just published last week, they have shown like really good top line growth is of around 35%. The margins they have sustained for the third quarter as well. And their international operations continue to grow. So we are very comfortable with having position in systems. And I believe that international investors will also definitely look into this company because, with some of the corrections in the market, there is always good opportunity to enter into such stocks for the long-term investment purposes.
Thank you very much for that. One aspect of this company that was sprinkled throughout this conversation was their export revenue. And in fact, I looked this up and I think the number was close to 85% of their net revenue is export based. And for some of our viewers, the reason this is important, very simply put, is they're collecting money from their customers denominated in foreign currency, but a large part of their cost structure is in the local Pakistani rupee. So if you are, as an international investor, concerned about the long-term depreciation of the Pakistani rupee, this could be one way for you to hedge that situation. So I just wanted to bring that to the forefront. I'll also mention for some of our viewers who want to continue with this due diligence, there is an investing briefing brochure on the Systems website from September 2020 that has a lot of good information that you can review at your own convenience. Listen, both Zin and Hifza, that was such a comprehensive analysis of this company. I'm confident our viewers, and I'm sure myself, we've picked up a lot of good, valuable information and insights that we'll be able to leverage when we conduct our own due diligence, whether it's on systems or whether it's on another IT services firm in this industry. So from myself and the viewers, thank you ever so much for such a wonderful lesson on valuation. And as my final point, as I wrap up this conversation, I'll just ask the both of you, how can our viewers follow your work? And then as well, how can they learn more about Silk Invest and possibly investing in your fund if that opportunity is still available?
Yeah, I think that our website is a good starting point. LinkedIn is a good, we publish a lot of stuff on LinkedIn. So that's something also which I would advise to look. And we're always happy and open to reach out to people who can reach out individually to us or over the internet. And so we are very in that sense, always ready to share our insights, and of course also to contribute to things like this, because I think the more people know that this frontier markets have so many good opportunities, the better for all of us.